You're listening to the Global Ooj podcast, where every week we learn about the world through the eyes of entrepreneurship. With your host, Ujwal Velagapudi.
So what do you do when you're a small business waiting on your account receivables to come in from your client? And in the meantime, you still got to pay for your goods and services, payroll, and overhead. Well, this is the same problem that Mario Jordan Fetalino, or Magellan for short, had while helping his family business. Clients would take months to pay you because of the long payment terms, causing a bind for even some of the most asset-rich of companies. Magellan is the founder and CEO of Acudeen Technologies in Manilla, Philippines, who is on a mission to help small and medium-sized enterprises with this liquidity constraint in Southeast Asia. They've won numerous startup competitions and are regarded as one of the fastest growing fintech companies in the Philippines. One thing that I loved was that because of their technology and business model, they're able to not only help the large enterprises, but even the smallest of businesses. Keep listening to hear how Acudeen and Magellan are making a life-changing impact for those small businesses. And by the way, after the show, he also told me that he makes his own beer. And even though I've never drank, I'll have to get you guys an update on that when we catch up in Manila sometime. Yeah, Magellan, so if you could you walk us through a little bit about what Acudeen is and how you guys are actually facilitating credit to small and medium-sized enterprises?
For sure. So Acudeen is a technology company that helps facilitate receivables discounting, or in some markets you call it factoring, some other supply chain financing, wherein you use the receivables of businesses as some sort of a collateral, especially small businesses who may not have hard collaterals like real estate or cars, chattel to use in able to get secured financing. Because in most emerging markets, you have a lot of these small businesses and they don't really have access to capital because of their size. And unlike, let's say, USA, wherein it's easy to access the credit score of a particular person, in an emerging market like Philippines, it's hard to make a clear-cut assessment because the credit score, there's not enough credit data available about people. In fact, our credit bureau until today has not really provided enough access to, or does not have enough data about the people, about the population, which is difficult which makes it difficult for entrepreneurs to have access to loan facilities. So through our technology, we're able to provide receivables discounting. We were able to make it available to a lot of small businesses, especially during this period where during the lockdown, because of COVID-19, a lot of these businesses are badly in need of cash flow. So through us, we are able to a lot of small businesses.
Okay, yeah, it's amazing. So as a small business that I operate, we've actually used factoring in the past. So how, because speaking from experience on the companies that we've used or the previous owners have used in the past, on what basis, I mean, can you go through the details of the rigor that is truly involved in actually vetting the companies that are receiving some of this credit? Because I think that's a significant portion where the other party, I mean, the underwriting process, it's very crucial, right? As far as default rates and things like that goes.
Absolutely. Yeah. So I saw that question coming since you're also in the finance you also have a finance background. So from an underwriting perspective, one of the key innovations that we have as a company is we actually have direct access with the anchors of these small businesses. A lot of the small businesses we deal with, directly are suppliers of large companies here in the Philippines. And when we started providing our facility and making it available to the public, we started first by coming up with a direct linkage with, let's say, the Unilever or the P&G here in the Philippines. So every time, let's say, a small business or sends an invoice to, let's say, P&G or Unilever, we're able to vet it because we are integrated with the ERP system of these companies. So that allows us to verify and authenticate the invoices quite fast and accurately. So that's our biggest innovation.
Okay.
So we combine business development by partnering with these large companies and technology to make factoring more accessible and safe.
Okay. Right. And so, I mean, factoring is it's not a new concept, right? I mean, it's been around, but it's digitizing it and providing it more, or providing that accessibility to the smaller businesses around the country.
Exactly.
And so, did that arise from some sort of personal struggle that you had, that you came across this, or was it a market opportunity that you had seen, or how exactly was, where was the inception of Acudeen?
Well, it's not really one or the other. It's usually both, right? So in my case, I had to experience the pain myself. Prior to starting Acudeen, I was also running another business, and our family was a big supplier to certain large pharmaceutical companies. So these are your GSKs, your Pfizers.
Yeah.
And we had to deal with like really long payment terms. And I remember there was a time when we were running the business when we were like asset rich. We had like a lot of assets. But if you look at our books, it's mostly receivables. And so when we started feeling some cash crunch during our operations back then, I had like a realization. Why the hell are we like suffering right now when, if you look at our books, all of these big pharmas owe us a lot of money. So what can we do about these receivables? And then that's when I learned about factoring. So imagine, before starting Acudeen, I wasn't too familiar about factoring. And then I started to look into this financial product. I approached banks to avail such service, but I realized it was so hard to avail. I was like telling the banks here in the Philippines, look at my clients. These are like large companies. How come it takes you 3 or 4 months to like give me a factoring facility for a AAA a receivable? So that's when I realized the opportunity behind starting a venture to solve this problem. So first, I experienced the problem, and second, I saw the opportunity. Then, bam, the entrepreneur in me decided to like, okay, why don't we do it ourselves?
Right. And so, as an entrepreneur, I mean, going back to that particular situation, the biggest issue that I've had when we've done it in the past, or I've seen other companies do it, is that percentage, is how much am I actually losing? What are those terms on it? So, I mean, I used to work in the sourcing world, and negotiating this with my vendors has always been an issue. If we're cash rich, or if we're not, how quickly are we going to pay? What is that discount? Is it 1%, 2%? What is that for, 15-day
I love your questions,
quicker
man.
feedback or quicker. So yeah, I mean, it always blew my mind. Why, like, what is that fine line between this is going to make sense for my company to do, or am I giving away my margins to this
margins.
other entity just because I'm in a tight crunch? So, how do you facilitate something like that?
We were expensive in the beginning, for obvious reasons, right? When we were starting, the only money that's easy to source is expensive money. So our cost of money was pretty high when we started. So, and when we offered it first to high margin businesses, someone who can eat our fees. But then we realized, this is not going to be inclusive. Our vision is all about inclusivity. We want to make sure all businesses, especially the small businesses, will have access to this, and yet we can't serve that segment. So slowly, as we build the credibility of the platform and our underwriting process, we started approaching financial institutions to get cheaper money, because we realized in factoring, since you're getting a discount, the businesses are very sensitive with how much it eats up their margins. It's not like your typical loan wherein it's not tied, because a typical loan, it's not tied to a company's margins, right? Usually they can like factor it up with their margins when they try to sell their products or services to their clients. But in factoring, when they only see how much it eats up their margin. So the only way to go for us was to get cheaper money by approaching banks. So between 2016 to today, from dealing with individuals, risk money as our initial funders for the business, we transitioned to evolving the platform to something that banks would like check out. So today we have like 3 banks who are using the platform, providing cheaper money to a lot of the businesses who are using us. So from a 24% annualized fee, so 24 PA when we started, we're now down to 7% annualized. So that's what we did.
Yeah, that's definitely a lot more affordable. And as far as who takes the responsibility of actually getting those funds in? Is it still on the accounts receivable team at the small business to ensure that they are getting paid, which in turn the investor is getting paid or the lender is getting paid?
So I mentioned a while ago, right? We have like a direct relationship with the anchors. So in essence, every time, let's say a PNG is about to release payment for one of their suppliers who discounted their receivable with us, that payment automatically goes back to our trust account, which is essentially attached to the funders. Let's say to the bank who buys it.
But then I'm getting at more so, let's say, because I've come across this where companies just will not pay. You know, I've sat on, for example, as the client dealing with my vendors, they would come to me saying, "Ujwal, we're doing business with you, but you guys aren't paying, and you're a multi-billion-dollar company. You have the money; it's sitting there, but we as a company are, playing around with our funds, right? International company trying to reallocate budgets and whatnot all over the world. So it would always be our vendor's responsibility to hunt us down, ensure that they get the funds actually delivered. So is the onus still on the small business to make sure that their client actually relays the money?
Yes.
Okay.
Of course, because at the end of the day, the recourse is with these vendors, right? It's with these sellers, the SMEs. So if, let's say, their anchor does not pay, they're the funders, the banks are going to chase them. So
Right.
they have. So also to help that structure, one thing we did was we had to make sure that there's accountability with the vendors, right? How do we make sure they try to collect?
Mm-hmm.
And you do that by not giving them the whole value of the invoice. So let's say if they discount $100 invoice, if the cost of the discount, let's say, is 1%, so they're supposed to get 99, right? What we do is we hold out 10 to 15%. So that means they would only get 84 or 89% of the value upfront.
Okay.
So at
that's
least
their
that
LTV
way.
of.
Exactly.
Right. Okay. That makes sense. Okay. So there's at least some sort of your collateral that's involved. And as far as I'm just curious, in the Philippines, do you guys have certain USury laws where you cannot charge an X amount of interest rate, or you cannot surpass X amount?
For financing, there is like an interest cap, but factoring in Philippines is not considered financing.
Finance. Okay. Right. Yeah. Same in the US. There's that. Right.
Yeah.
Yeah. Yeah. There's.
Yeah.
Yeah. I've come across that where, because the industry, I to be honest, I wasn't aware of it till, maybe about a year or two ago. And it just opened up this whole, I wish I had this back when I was in my corporate world where, I could provide this to my suppliers, because it's an alternative and definitely provides that ease when you are a small business and your client, even though they could have billions in the bank, are simply delaying that process. So as far as the clientele and the small businesses, what is a small business as far as revenue, or how small are you able to provide the services for, or your lenders able to underwrite it for?
Okay, so our fees are all percentage based, and we designed it that way so that we can reach the smallest businesses, like micro scale. So imagine, I'll give you a real example. We have a vegetable vendor who has like invoices with a large supermarket worth $20, $30 on a weekly basis. But despite the size of that invoice, he needs to wait 60 days to get paid.
Wow.
Which is crazy.
Right.
Crazy for $20, right? But that $20 is like budget for that vendor, for his family, for a 2-week period. Imagine, that's like 2 weeks worth of budget. So since we're percentage based and there's no fixed fee, we're able to like discount his invoice. Of course, we're gonna make a small amount of money, but at least in the grand scheme of things, we're able to equitably serve both the micro SME like this and a large vendor similarly, right? So,
man, Magellan,
that's our goal.
That is crazy. That wow. So, yeah, I mean, that's just blowing my mind, because I was born in India. Every time I go back, or I've visited various developing nations or even frontier emerging markets, and there's street vendors, there's folks that are quite in that boat as far as revenue goes. You're talking tens, maybe hundreds of dollars on a monthly basis or weekly basis, and that is their life and that is their livelihood. Yet, if they are stuck with getting that credit from their clients, then that is crazy. That's amazing, Magellan.
Yeah.
To be able to provide that to that small of scale. Because whenever I go to a bank, when I was starting off and trying to buy my first business or my first real estate property, they had thresholds. I was trying to buy something very small, very cheap, and they said, no, get the heck out of here. we're a big bank, multinational bank.
That's right.
We're not dealing with pennies and chump change here. And it was a sizable amount, but it still was way too low for them. And I had no other option except to go cash and to purchase it. And on this front, where you're an operating business, you need this cash flow, and you're that small, just starting off. That is a full life. I mean, that is literally their operation. That's amazing. Yeah.
That's so because it was our vision, which we wanted to make sure it's inclusive, right? So the only question we had to answer is, how do we operate this business without accumulating a huge OPEX that will make us inaccessible to small SMEs? So that was the problem we're trying to solve. And we're very aware of that, and that's how we designed our business.
And so I'm assuming it is heavy tech-based as far as how that operations goes, so that you are that aspect.
We only need one person to run the platform. We only need one person to run the platform. Yeah.
Wow. And can you go a little bit into the tech, your infrastructure, as far as how it was designed at a high level?
On a high level, the biggest problem with the landscape from a tech perspective is that every company uses their own ERP system, uses their own, each bank has their own core banking system. So that fragmented tech environment makes it difficult for all of these businesses to do things integrate in an integrated manner. So having an understanding of this, we decided, okay, why don't we be that technology provider who can make all of these systems talk to each other so that we can provide factoring sustainably. So we designed a modular architecture on the technology. So we have a capability to talk, let's say, to SAP. So we can talk to, if you're using QuickBooks, we can talk to QuickBooks. We have APIs available for all of this. And if you need this, and then when we talk to, let's say, to banks, oh, you already have this? You already have this particular KYC module? Okay, we'll take it out. How about we just use this? So it's very modular. We designed it like a Lego, wherein if you don't need this part and you want to save money on that, we'll take it out. Let's use this.
Okay.
So that's how we did it.
Right. Huh. It's interesting. And as far as, so, I mean, I'm still kind of stuck on how you're able to provide that for businesses at that scale. So if you can provide
for businesses at that scale, the reason why we can provide it to those small SMEs is because almost all our expense as a company is variable. We don't have any fixed cost. So everything is tied up to everything is tied up to the transaction. So if there's no transaction, there's no cost to it. If there is a transaction, depending on the size of the transaction, then that's the time we accumulate a cost to it. So that's it.
And is that something that you had stumbled upon after trial and error, or was that kind of the mindset going forward? Hey, I know we should be a variable-based company because of the scale, that you want to provide it to some of these smaller businesses. So we need to be this way. If we can't sustain if we do have these high fixed costs. So was that from the onset, or was that through trial and error? This is working out now, and let's go with this.
I'm not that smart, Ujwal. We made a lot of mistakes in the beginning. So,
okay,
that was the vision, yes. But we had to stumble on a number of challenges over the years to really connect the dots.
Okay. And so are you able to take what you're doing right now into, to other countries? I mean, I'm sure in your vision or on your drawing board, you've got the growth, you've got your projections outlined. Where is Acudeen going to be available in the future? What other regions, what other countries? Are you currently operating in the Philippines or in other markets within Southeast Asia, or do you still have plans to continue expanding that?
We are in Southeast Asia. So our facility is called Chopay in Myanmar. So we've been in Myanmar for 2 years now, helping out a lot of SMEs in that part of the world. We are also already working, and we have a partner in Vietnam who's already. So we're already preparing. We were supposed to launch this year, but we got held up because of COVID-19. So we will most likely push that project in 2021. And of course, we're planning at least in the next 5 years to be a significant player in the larger Southeast Asian countries like Indonesia and Malaysia.
And so when you go, you mentioned a partner in Vietnam. So can you, or even Myanmar, where you've been for 2 years, can you go through exactly how that works? I mean, you're running in the Philippines in, let's say, 2018, and you want to go to Myanmar. Where do you start? How does that process work? Who do you partner with there? And how do you know who to partner with, and why, and also why partner versus doing it fully yourself?
Well, you have to understand that if you want to scale fast, it always makes sense to have like a local partner, someone who understands the market. Because I mean, yes, it's easy for someone to understand a market, right? Looking from the outside, but knowing the market, knowing the people within that ecosystem is very different. And you have to understand, in Asia, it's all about trust. Business is all about trust. And building trust, if you're coming in as the new guy, building trust takes time.
Right.
So if you want to like hasten that up, go find that one anchor partner that you want to be, who's a local or who has been there for a very long time, that the market knows, the market trusts, and work with them. Find that right partner for you, because that will be your anchor to grow your business in that market in an exponential manner. And that's what happened with us in Myanmar. We partnered with a group who is known by a lot of the conglomerates in Myanmar. And that gave us, I'm not going to say easy, but it gave us like access to all of these companies together with like the trust that they bring in to the picture. So that's the game in Asia. That's how you play here, and you know that from India, of course.
Right.
It's all about trust.
And so how does that prototypical partner look like? I mean, who are you partnering with? Like you mentioned, the access, the network, the resources that they're able to provide, and the doors that they can open, or is it more so, hey, there's this financial services business, they don't have this service, let's go and integrate and provide a complementary service? Or how does that work? Or is it more so your tech stack that you're
it can go two ways. Either we partner with someone who has access to the money, the financial services, or we partner with someone who has access to the market. And then usually we just fill the void that's missing. So we can go either way.
Okay. Nice. And then what about opportunities outside of Southeast Asia? I mean, is that a market that you first want to master, grow into, or is it? Do you see additional opportunities in other regions, like for example, let's say a very large market like India, for example, or China? I mean, or are those too saturated with like products? And
there's the thing, Ujwal, is there's a lot of players similar to who's doing a similar business to what we do. Like in India, you have Validus. There's even Credex, and so the way to play this business, from my perspective, is you have to be a market leader in your region, in your market, and later on, all the giants. Once you attain market leadership, it's either you become the acquirer, or you get acquired by one of these players. Right.
Okay.
So I'd rather focus our resources becoming a market leader in this region rather than spread out our resources all over. We don't want to be like Uber, who's just like all over the place.
Right.
We want to show our dominance in a particular region, and so that our friends and competitors can feel it.
Right. And so, can you give me a little bit more of an understanding on Southeast Asia? I mean, all these regions, these continents. I mean, these. I feel like it's too broad. Or do you disagree? Yeah. I mean, is clumping everything into Southeast Asia too broad, especially when you mention Indonesia, Malaysia? Those are, in my opinion, very different markets. And what's your take on that? And is it really a lot more minute than the entire list of all the Southeast Asian countries?
Because the one thing about Southeast Asia, you're right. Culturally, it's quite diverse, but at the same time, in terms of like government systems, religion, it's super diverse. It's like a hot pot of all of these ideas. Right. And so getting into another market is quite challenging because your model in Philippines may not work as easy when you get to, let's say, Indonesia or Malaysia. But one thing that really binds these markets is there are certain problems that are very common. Like, obviously, all SMEs around this region has financing issues. The inaccessibility to financing is a common problem. So it's easier for us at least for our business, to like go into Myanmar and tell them, this is what we do. We see that this is the opportunity. Can we work together? Okay, let's do it. We understand what you're doing. So the big hurdles in getting to, let's say, Indonesia or Malaysia would be number one, just finding the right partner, and number two, Islamic banking.
It's tough to package everything in, right? Especially Indonesia, Malaysia, into the Southeast Asia bubble. So, I mean, how would you go about expanding, and what's your take on the nuances and the various degrees of understanding each culture, language? I mean, everything, all the intricacies that come with that.
Always localize. It's not going to be an out of box solution. So you have to make sure that when you enter a market, you localize, understand the needs of the market, understand what you have that they need, and what you have that they don't. So by being flexible on how you approach the markets, the opportunity opens up.
Right. Oh. And when you go into those new markets, how does your team scale up alongside with it? So, for example, in Myanmar, is it the partner that you have over there? They are scaling their infrastructure, and you're providing certain resources from
Yeah.
your headquarters, or how does that look? Do you have boots on the ground as well?
We have boots on the ground. It usually takes about 6 months to do a full transition. Um,
Mm-hmm.
in that 6 months, obviously we have a few people, like about 3 or 4 guys, who would be in the market to do knowledge transfer and understand what needs to be changed in the system, depending on
Mm-hmm.
the market needs. And after that 6 month period, we lessen the manpower that we provide, and we just do regular audits and checks on a monthly basis to see what else needs to be done. And from a
Mm-hmm.
strategic perspective, we're usually, because we create a JV in those markets, so we take board seats in those businesses that are built, which so that
Okay.
we are able to guide the JV partner on how the business should be run and scaled, and how should the strategy be formed for that particular market.
Mm-hmm. And
Yeah.
you mentioned three banks that you've partnered up with. Outside of that liquidity that your lender is able to provide to ultimately the small businesses, in addition to that, what about to fund your operations? I mean, was this a bootstrapped operation, and did you have various rounds of capital raises that you've gone through? And can you take us through how that, from inception, how where we are today with that?
When we started, we bootstrapped, right? We bootstrapped until we reached a proof of market.
Mm-hmm.
So when we started having customers, that's when we decided, okay, hmm, it's time to raise some money.
Right.
So, because we needed the money to scale up the technology,
Mm-hmm.
and uh, if you saw the, oh my god, if you see the early version of our platform, you'd vomit. You would vomit, my friend. The how bad the UI is and
Yeah.
how bad the back end is. It's
Yeah.
just like it's shit.
Right.
So, but it works.
Mm-hmm.
It's shit, but it
It was
works.
enough to get
And
funding.
enough us to get to proof of market, right?
Right.
So we started raising capital because we know the kind of technology we want to create. I had a very good CTO
Mm-hmm.
who really like designed the modules and how it needs to be built based on the technology environment in Philippines. So when we understood the costs that is needed to develop it, that we started raising seed capital. And after a few months, we realized, okay, we need to ramp up our marketing, acquire more of these anchors, the conglomerates, and vendors. So we had 2 rounds of capital, just to shorten things out.
Mm-hmm.
And but ever since 2018, we haven't raised any additional equity. Uh, so most likely when we start mobilizing, let's say Vietnam,
Mm-hmm.
that's the time when we will raise capital again.
Okay. And how was that process within? I mean, was most of the equity raised within the Philippines, or did you go to other adjacent countries, or how was that process in terms of being able to woo the investors within your local market, or even foreign money? And
Fundraising in Philippines locally is challenging. We don't have a mature VC market here. Um, there's a
okay.
there's a huge uh, there's a huge gap from seed to like private equity. So private equity money would not look at deals that's lower than $5 million. So that's the challenge. So we had to like raise also internationally. So we have like a family office in Singapore who invested in us. We have 500 startups is one of our investors. We we became part of Seed Stars. It's a Swiss organization for a while because we won their competition in Geneva. So when we won, they gave us funding uh, to buy equity in the business. So so yeah, we had to raise outside of Philippines mainly because there's not enough VC here.
Right. And do you see that trend shifting at least a little bit in the past few years, or is that still way too early? Still not enough exits for some of these VCs to say, hey, you know what, I'm going to jump in here?
You know what I realized? The reason why there's not enough VCs here is because Philippine businesses or Filipinos who have money, they don't like the Western model of doing venture capital, wherein the Filipinos with money has the cap. They have the capacity to invest, but they only invest in businesses they understand and businesses who can generate cash flow. So if you don't generate cash flow at the onset, they're not going to put money in you. And now looking back, with all this pandemic that has happened, that kind of thinking will just grow further. I have a feeling that there will be much less money that will be invested in like concepts, ideas that are not proven, that are in their nascent stage. And but at the same time, I can see a lot of entrepreneurs, especially here in Philippines, who started to shift their mindset from let's delay cash flow and just like perfect this product. Let's just keep burning cash and make this product perfect. To, you know what, this product, it works. We don't care. Let's start generating cash. So, so that Eastern mindset of like it is being developed. So even if the local businessmen here who have money who wants to invest still don't have like the mindset to invest in tech businesses who are burning cash. What's happening is that the entrepreneurs here are getting elevated to a point to understand this mindset. So most entrepreneurs here now are trying to like be more Eastern in their mindset versus the Western model.
Right. So you think it's going to take a step back in terms of the Western philosophy in terms of VC deployment?
Yeah.
Before it gets better.
Nobody likes it here, man. Nobody likes it.
Huh. That's so interesting. Wow.
Yeah.
That is really interesting because would you say a lot easier to get the foreign money because there are so many big Western companies in the Philippines, some sort of operations or some sort of entity in the Philippines? So is it primarily the Western money that's coming in, if not all?
Actually, there's not a lot of Western money coming in. There's just more local money that's like being made available. And more Chinese money. There's a lot of Chinese money coming in. So
okay.
So, yeah.
How is that relationship? I mean, as far as politically, the Philippines, I mean, how is that structure? I'm sure as a fintech company, have you gone through or have you had any hurdles with any government regulatory boards or agencies or things like that where, hey, they're a pain in the butt, we gotta go around them? Or has it been relatively seamless because your operations are kind of running in parallel, not in clashing with anything that's in place?
Our story is financial inclusion. So the mere fact that this is the our message out in the public, we got the support of a lot of the regulators. We're working very closely with them.
Okay.
So it's it. I guess that we did the right thing of like crafting our message that way, because there
Okay.
we have like the way our regulators police, the way they police players in the finance space. It's just, my God, it's so difficult to do anything. But so when
Right.
so it's all about the message and the relationship we built with them early on.
That's great. And what about the local ecosystem of your peers? Your fellow founders, other developers, other people within the industry or in the tech world. How has that changed over the past few years since you started?
In what way? In terms of the startup ecosystem? What are you
In terms
referring to?
of in terms of the growth, and then I guess I'm more so getting at
Oh, as an
from when you have
organization,
started to
how we evolve.
right.
Well, we're a very different organization from 2016 when we started, and I have to say, there's been a lot of I would like call them phases. There were phases from 2016 to 2020, wherein there was so 2016 was the excitement phase. There were only four of us, and I remember. So it's me, my co-founders, and we would attend all of these startup festivals overseas. We would go to Hong Kong, we'd go to Singapore. Uh, and we even went to Europe, and it was fun. It was exciting because you're pitching a new idea. You're pitching. You feel like you're very excited about the future. So, and we were lean. We were lean. So it was just us. So we were like just friends doing a very exciting project. And then you start getting employees, right? You start getting employees. You start getting new people in, and you have to do it quite fast. So all of a sudden, from that phase one excitement, we have to like, okay, we can't be as cool as before. We have to like also set rules. We have to set standards in this organization. So so that these new employees have something to follow, they need to know what needs to be done. So we started like framing everything. So this is like the part when there was a lot of burnouts on our end during that period, because you have to put structure on everything. You have to like every detail. You have to like monitor all the KPIs that you pass on to the employees needs to be clear, needs to be defined. So that was like the the burnout period, and then you have the governance period wherein your board, since you already have investors, starts putting in governance structures into your organization. And then now, so now I can't do this, I can't do that anymore, I can't decide for myself anymore. So
Right.
From that startup feel when you feel like you can do anything, everything in like an instant, to like today wherein there's so much parameters, there's so much governance structure, which I'm not complaining on, by the way. I mean, it's good. For I am happy that the organization has evolved from an upstart to now an actual organization with proper rules and protocols to follow. So that's how it evolved. Like right now, the only reason I'm wearing a t-shirt is because we're all working from home. But on a regular day, I have to be in my barong. Barong is like our Filipino formal suit, going to the office.
Oh, really? Okay. Yeah. Huh.
There you go.
That's great. Yeah, no, that's amazing. I mean, the journey that where you guys started, where you guys have come right now, and then, next time I visit Southeast Asia, hopefully, and it'll be ubiquitous all over with your platform. But Magellan, again, going back to what you told me about street vendor, I mean that I feel that vision. I absolutely love it, and I truly hope that all businesses are really provided that credit and have that accessibility, and services like Acudeen are able to provide that. So absolutely amazing.
Awesome. And thank you for the opportunity, Ujwal.
Thank you so much for listening to the show this week. Please do leave a comment on your thoughts about today's episode, and make sure to hit subscribe to get the latest on the Global Ooge. Or if you already have, please share with a friend that you think might enjoy.